Today we're going to talk about, I want to spend next 30 minutes, 40 minutes on DeFi, decentralized finance, which has now become very, very popular. Of course, based on the improvements in the technology that has happened over the past few years in this crypto economy. Okay. So let's jump onto decentralized finance. So DeFi is a common name for decentralized financial apps, or the whole concept of decentralized finance. So been attending this meeting months ago. I did the kind of an intro to whole decentralized economy, wherein we talked about the basics of starting with the blockchain and why Bitcoin, what is Ethereum, what the basic differences. That time I did touch upon what the decentralized finance is, but kind of rushed through it because hey, this concept was still evolving and things change so fast in this economy. Is another a few months later, things become outdated. So now there is little more visibility, little more awareness around this industry. I thought I'll do a refresh on what's a decentralized finance is. And many of you probably were not even attending this session because you're not part of a meetup. So this will be first time. But if you had attended it earlier, this will be a refresher. All right, so let's jump into understanding of what's a decentralized finance is. Again, today, anything that we're going to talk about is only for educational purposes. I'm not recommending investing in any crypto assets or trading on any decentralized exchanges. Today, we're only going to discuss to educate ourselves on this new economy. Some of the caveats before we jump into this, you should have some knowledge of crypto assets. You know, what is blockchain? How does blockchain work? Blockchain is the fundamental technology underlying everything in the crypto economy. So that's why I asked you first question was, have any of you have already, dipped your feet or dipped your toe into this crypto economy by buying any digital asset? That is the simplest process. Open an account in Coinbase, Kraken, Gemini, any of the regulated exchanges, and go ahead and pick $100 worth of any of your favorite digital asset. Right? So some knowledge will be required. So if it is for the first time you are hearing about crypto economy, ask me questions, because my assumption is you at least know something. You have heard of crypto assets, you know how the blockchain, etc. work. We'll be focused on crypto as a technology and DeFi as a use case, but not really talking about assets in terms of what we should invest in. Okay. And of course, some numbers that I may present have become outdated because those are, let's say, September, October, November. Now things probably would have changed a lot, but the concept is still valid. So why are we talking about decentralized finance? Because the world and started after the Bitcoin blockchain came into picture, which was a public blockchain. There are more and more demand for doing the regular things in a decentralized way in which we don't have any intermediaries. So on the left-hand side, you see the centralized world that we know as of today. We got a fiat money. It is centralized. It is controlled by the central banks. Got a dollar, yen, euro. On the right-hand side, now we'll have an equivalent of the centralized world. It could be your stable coin, which is pegged and have a stable currency, stable value. DAI, or Bitcoin. You have central banking institutions. You have an institutions which are completely autonomous. MakerDAO. You have a commercial banks. There you have a commercial applications on which you can buy and sell, or like you can go and deposit your cash on Bank of America and you can earn some interest. You can earn some yield. We got a parallel world in decentralized economy in which you can go and deposit your coins and earn some yield on it. So everything that as we know of in a centralized, in a traditional finance world, once that is being done on using public blockchains without intermediaries, that's where it becomes. This is the world of a decentralized finance. Little bit of history. Bitcoin was launched in 2009. We had some first hype cycle 2013. Then Ethereum goes live. So Bitcoin use case was, it started with as a currency, means you can buy and sell Bitcoins to each other. Nothing, you couldn't have done anything beyond that. It was on a public blockchain, but only thing you could do with that is like a commodity, like a gold. What can I do with the gold? I mean, I can buy and sell it. I cannot program it. So Ethereum came into being in 2014, which added an ability of being able to program it on top of public blockchain. And then we saw the first use case of the programmability was raising money through ICO. And those, if you were involved in 2017, it was a crazy, crazy day on ICOs. That reminded me of 2000.com, that everyone was just waiting to launch a new coin through ICO. Even Kodak did their Kodak coin. Even a energy drink company, Long Island, they just changed their name to Long Island blockchain and the share was up like 5x. Right? So as happened with every mania, we saw the crash. And in 2019, then we saw again interest started to pick up based on the lot of technological advancements that were done. In 2020, we saw a lot of institutional investors getting into it. Now understanding the utility of why one is different from other. I mean, I hear this question multiple times. Why is Bitcoin so valued when you can have another 2,000 other coins? Like asking the question, why is Facebook so valued when you got another 100 million websites? Each serve a different purpose. And now we are seeing a lot more applications being created on top of blockchain as a technology. So that's a brief history. Now, DeFi, could this become a killer app for this new application, which is Internet of Money? So blockchain, if we go back, before we got this whole implementation of a blockchain, etc., everything else has been kind of a digitized. I mean, with the coming of internet, information was digitized. We no longer have to send a paper letter to someone else, but our finance, the basic infrastructure of how the money moves, that still wasn't digitized. Even though you might feel that when you send money to me through PayPal, I get it immediately, but that's not the end of it. The settlement hasn't happened yet. PayPal will be talking to my bank to withdraw that money. That will take place at 3 days later. So that infrastructure is still moving on a snail pace. It's like I'm sending you an email, then I'm actually taking a printout of that email and sending you through a snail mail. And only once you receive that snail mail, the transaction is completed. So we had a I would say, can't get that word. We thought that everything is digitized in a finance. Why do we need another one? But the overall infrastructure, that's still not, hasn't yet caught up. That still run, it takes 3 days for us to settle the transactions. And so when you swipe your card, merchant doesn't get paid immediately. There is still a long process that needs to happen. That is why it is sometimes said it is easier if you want to transfer a big amount of money and you don't want to pay huge fee. It's easier maybe to take that money and stuff it in your suitcase, in your luggage, and go over to London rather than trying to transfer it over the wire. I know this is an extreme example, but you get the point. Hopefully that the internet has changed how the information flow, but not how the money would flow. It's the first time when we saw an application of a Bitcoin where actually the money could be not just paid but settled immediately. Today the payment happens, but the settlement happens later. But for any of these, we need to find out any of the technology to succeed. We need to make sure that there are applications that are useful for larger public beyond the initial hobbies. We saw with the internet. If internet would have remained only as a communication system between universities and DARPA, it wouldn't have seen the growth that we are seeing it now. Why internet became popular? When websites started to come up, where a person like you and I can start now thinking, oh, I can actually, this technology, I can make use of this technology. When the initial IRC chat app started to come up, then Yahoo came up, then Yahoo Messenger came, then Skype came. So those became the killer apps which popularized internet. And today we don't even think about that internet as a technology. I mean, it's supposed to be there. It's like pervasive. Now, blockchain and the decentralized technologies have been in the area of hobbyists for now more than a decade. Because the only use case that we had earlier was to transfer something immediately of value. And that value is also dependent on if you are valuing it or not, or if I'm valuing it or not, which was the transfer of Bitcoin. But now, with advancements on smart contracts, with advancements in Ethereum, now there are more and more use cases being built out. But until those use cases start to touch the common persons, this would just remain an area where the nerdies and the techies will live. And then it won't grow. So DeFi could be this killer app, or I would say app store, because DeFi is not just one app. This could be the killer app store for the internet of money. So, like we have the internet of information, which is the World Wide Web as we know today. Internet of money could be the another pervasive environment where we actually transfer the digital money, the real digital money, and settle it immediately. And that would be built on top of blockchain technology. So that would be one which could be the killer app store and will become pervasive in terms of usage. So let's look at what's happening in the DeFi ecosystem. The total value logged in the various DeFi applications have been growing. In the end of December, it was almost $15 billion. This grew 2000% in 2020. The whole ecosystem has been growing like crazy. Like in today's world, we send payments to each other. There are applications. These are called dApps, decentralized apps. They're available in which you can send payments. There are infrastructure work happening. You can do your identity management. So anything that you can do over this in a decentralized without intermediaries, you can do on a platform which are built on blockchains is what constitutes DeFi. So there has been a explosion of a growth of the many companies that are working to build applications on top of that. And those applications are related to sending payments, verifying your identity, derivatives, insurance, prediction markets, exchanges itself. DeFi user growth had exploded in 2020. Means these are the users who have accounts in various, either it's exchanges or lending platform. It's like if I have an account on a lending platform, could be Prosper or Lending Club. Similarly, in the decentralized world, I can open an account on lendf.me or other lending platforms. So the user growth has been exponential in 2020, and the assets per month has also been growing. So clearly, users have been flocking and trying out various services that they are used to in the real world, in the fiat world. When I say fiat, means whatever currency that you are generally deal with, government issued currency, which is your USD, yen, etc. You can do the similar things with your digital assets and a lot more things that you can't even do it in a fiat world in the DeFi space. So what is DeFi? Now this comes from that white paper of Federal Reserve Bank at St. Louis. As you understand, government institution, federal bank, they won't be putting up nice pictures, but I'm not gonna put the whole white paper in this. So, but I did extract some of this information. So this generally refers to an open, permissionless, highly interoperable protocol stack built on public smart contract platforms such as Ethereum blockchain. Ethereum is just one of them. It is the most popular, but there are challengers to Ethereum also. It replicates existing financial services in a more open and transparent way. Now, this is not coming from some libertarians who are saying, oh, screw the government is against us. I just copied and pasted this from that white paper released by, Federal Bank. And they say that this is in more open and transparent way. It does not rely on intermediaries and centralized institutions. Instead, it is based on open protocols and decentralized apps. Okay, so if there are no intermediaries, there are no escrow managers, then who is enforcing what we agreed upon? Agreements are enforced by code. And transactions are executed in secure and verifiable way, and legitimate state changes are persist on blockchain. State changes mean, for example, if you and we entered into an agreement that I'm going to lend you, say you want a loan, okay, I'll give you a Bitcoin, and then you'll pay me X% interest on it. So that transaction, the state change with the transaction that my Bitcoin being transferred to your account will be available on a public blockchain. And the fact that you will continue to pay interest to me, and if not, that transfer happens back to my account. That all, we don't need any escrow manager to enforce this. This already will be enforced by smart contract and will be validated by thousands of validators on a public blockchain network. Again, this is not my definition. I just copied pasted from a Federal Reserve paper. This architecture can create immutable, means you can't reverse it. So if you have agreed to something, maybe I can bribe the escrow person, but in this case, it is immutable. If you've done it, it's set in stone. This can create an immutable, highly interoperable financial system with unprecedented transparency. Those who say that this is a dark world only to be used by drug lords for nefarious purposes, Fed doesn't agree. They say it provides an unprecedented transparency, equal access rights, and a little need for custodians because agreements are enforced by code. So every commissions or the percentage of money that we are paying to those intermediaries, that money can be saved. And that's like billions, hundreds of billions of dollars of industry across the world. No need of custodians, don't need central clearing houses or escrow services, as most of these roles can be assumed by smart contracts. And this is not coming from a techie person. This is coming from a financial powerhouse, from a central bank of the United States. So that's what, in a sense, the overall what DeFi can do. So some of the key projects on this, I'll not go through the details of these, but a quick overview. For example, Chainlink. Now, Chainlink is a decentralized Oracle network, not the Oracle as a company or the database company, but Oracle in an English word means they know what's right. So if we have a smart contract which says, and say I'm betting with Dave, saying if tomorrow at noon the temperature is more than 75 degrees in this zip code, I'll pay you X amount of the X amount of Bitcoin, or a fraction of Bitcoin, X amount of Satoshi. So somewhere I need to find out the information that what the temperature is. So that information I needed from outside of this blockchain network. That's where this chain link come into picture, is that I get information from real world and that connected to the blockchain. Any information that a smart contract need from outside of the virtual world, these are the networks which are called Oracle networks. Chainlink is the most famous. Uniswap is a trading platform. Today, you and I, we trade on exchanges, because I can't trade directly with you. Say you have Apple shares. I want Apple shares. You can directly send it to me. What you have to do is you basically sell your Apple shares on an exchange, NASDAQ or whatever, and I buy from through my broker platform. I buy on that exchange. What does the exchange done? They just facilitated the transaction. But the asset is coming from you, and I'm buying the asset. So if you have a decentralized trading platform like Uniswap, we don't have to pay those fees. Again, there's a raw Bitcoin. This is like a synthetic. Wall Street loves creating those synthetic products. So now we have a synthetic version of a Bitcoin, which can then run on Ethereum blockchain. I don't want to get into it, too technical to talk in this meeting. Similarly, we have a projects like where you can lend and borrow. We have a project synthetics, which is a derivatives. For example, this seems to be interesting. I need to explore this more. Is Tesla shares? They are not available for trading in say Singapore market, but a synthetic version of Tesla share is a derivative of Tesla share probably is available on SNX. DAI is a stable coin, means the value of this stays the same. It doesn't fluctuate. And this is very important if you have to use anything for transaction. So Elon Musk saying you can now buy Tesla with Bitcoin. I'm not gonna go rush and now buy Tesla using my Bitcoin because I'll feel pathetic if I sell my Bitcoin now to buy Tesla. And next week we hear a few more institutional investors getting into Bitcoin. Bitcoin goes to $70,000. I'm gonna have a huge seller remorse. But I need something for to use as a currency. I need something which doesn't fluctuate this much. That's where the stable coins come into picture. So when I hear and people saying, if we got a central bank digital currency, do you think Bitcoin will still have its value? I think yes. There will be competition for stable coins though. The stable coins, today it is, if I have to buy Tesla, I have to pay 56,000. That stable coin is value is not going to change in a week or a month. They hold their value. Maker is how they, again, this is a company that exists only in a blockchain, which issues this DAI. Compound is again a lending platform. SushiSwap is like a Uniswap. Again, it's a decentralized exchange. And Yearn Finance is, let's say, Betterment or the similar service to Betterment. Wealthfront, wherein asset management. You give your asset to us, and we'll figure out a way to invest it in the best opportunities that will earn best yield for you. Some of the key projects. I'm just trying to give you a little more insight into what's possible already in decentralized finance space. So now let's look into how this is being built out, right? So key building blocks of any DeFi, and I stole this from that Fed white paper. They've done a great job in explaining it, and now it started to make sense to me when I read that white paper. So any build blocks of the DeFi, there are multiple layers, and what I'll do is kind of do a mapping of how these layers exist in our centralized finance as we know today, so that it is easy to understand. Yeah. So there are multiple layers. Settlement layer. I talked about that we paid payment to each other. We paid an application layer. I use PayPal to pay to you, but the settlement hasn't happened because the money still moves between our banks through ACH network. Sorry, through the, yeah. So there are multiple layers: settlement layer, asset layer, protocol layer, application layer, and aggregation layer. So these are the building blocks of DeFi. A lot of work had happened over past few years across each of these layers. And that is why now DeFi is coming into mainstream. Let's look at each one of these. And I'll try to explain it in terms of relating it to the centralized world. So let's first look at settlement layer. In DeFi, it consists of a blockchain and a native asset protocol. So when we're talking about settlement layer, the Bitcoin blockchain or Ethereum blockchain, that's the underlying, the most basic settlement layer. It means if you and I, if we have built, let's say we're trading on a DeFi app and I want to exchange my token X, send it to you. or exchange with you, do some barter. At the end, at the settlement layer, it will still be a transaction happening on Ethereum. All those tokens that we bought will eventually get converted into Ethereum, and that's where the settlement layer transaction will happen. And that's where all the information will be securely stored, and all the execution will be validated by validators. So in a centralized finance, you could talk about Swift network, Fed network, under which the whole money moves. Let's look at an asset layer. Asset layer talks about what is that we're trying to move. What's the underlying asset? In our centralized finance, the currency is asset. I'm trying to move my dollars or euro or yen or rupee or dinar. In decentralized world, this layer consists of all the assets that are issued on top of the settlement layers. If it is a blockchain, the asset would be Bitcoin. If it's Ethereum, the asset would be the tokens that have been created on Ethereum. It's like I said, you and I, we can deal in any of the other tokens that are built on top of Ethereum. There are two types of it, fungible. I think when I last talked about non-fungible, like we were talking about like a deer in headlights. But today, non-fungible has become mainstream, NFTs. So either you are exchanging a fungible token. Maybe it'll say, I created a new token, OG coin, Optiongig coin. We are exchanging OG coin, or you're exchanging a non-fungible token. That's what forms the asset layer. It is equivalent to, say, currencies in our centralized finance. Let's move up. Next comes the protocol layer. What's then we're trying to do? Are we trying to exchange, lending, derivatives, asset management? Standards for specific use cases, such as decentralized exchange, debt markets, derivative. What are the standards for those? So, for example, in the real market, if I would move the money movement will be ACH transfer or a wire transfer. For other, it could be a different protocol. But all these exchange, lending, derivatives, they all form at a protocol here. And we have equivalent of these in DeFi. Then comes the application layer. This is where you and I will start to interact. But for us to interact at an application layer, all this work on the lower layers need to be done. This is where the user-oriented applications are connected to individual protocols. So if I were to lend something, I will use Aave or Compound. This is where you have the website. You go to www.aave.com or you download an app of Aave, which is where the end user interact with. And I can send my digital asset over to you. But below, all these things will happen. So this is where the smart contract interaction, we basically get a web browser base. I can throw up a smart contract code and expect the other party to understand it. I won't understand. So this is where we get a user-friendly interface to pick up and, I can say, oh, I want to lend it. This is what a percentage I am interested in as a yield if someone wants to pick it up. And then we make into a transaction. Eventually, that gets coded in the smart contract and then etched onto the blockchain on the settlement layer. In centralized finance, it's a PayPal, Venmo for moving money. Those are the applications that we built for moving money at an application level, right? At the settlement level, the money will still move through your bank account into my bank account using the bank rails, using the such networks. Lending club, which is I can sign up as a lending club as an investor and lend it to people. Prosper, which is P2P lending, person to person lending. Finally, finally, the aggregation layer is where multiple applications can be put together in one big aggregated application. Centralized finance, you got a bank website. On a bank website, I can apply for a CD. I can deposit my money that I hold in the bank into a CD, which is, I'm trying to earn some yield. I can transfer money using bank website. SoFi, another example in a centralized finance. You can trade on SoFi. You can send a loan on SoFi. And now Square Cash App, you can do multiple things. So that's the highest level, which is the aggregation level, wherein for the users, we created an aggregated interface in which they can do more than one services, which will connect with various protocols simultaneously. Right. So if you really look at it, this is how we end up on the DeFi. So now, okay, it's the traditional infrastructure that I'm already familiar with somewhat is now being built onto a public blockchain, which is a lot more efficient, lot more open, lot more transparent, lot more inclusive. That's why this DeFi is, I would say, revolutionary. It's nothing new. We are just moving the money onto internet, and everything that we can do with the money, now we are moving into a pure digital form. So when I see someone on Twitter or LinkedIn saying, what do you ever think that Bitcoin, again, I'm not speaking of Bitcoin, it could be any other coin, would succeed as a payment because Visa processes 2 million payments in an hour and Bitcoin does only this much. I mean, Visa is only a payment process, it doesn't settle. But if you pick up Bitcoin and any other one, it is not just payment, it's also settlement. It doesn't take 3 days to settle. It's immediate settlement. What, I will take 10 seconds? It's 10-second settlement. So, but if you know at these layers, now we understand, okay, we've been playing at this layer and thinking that it is already digitized. No, these things are still happen. They take a lot more time. And that's the inefficiencies in our current financial infrastructure, which is what these blockchain-based technologies are trying to solve. So like I talked about, a lot of growth happening on the Ethereum, because a lot of these applications are being created on Ethereum. So overall, this is as of September 3, there are almost 1,800 applications created on top of Ethereum. Now these are different blockchains. Which one will stay and survive, let's say 10 year, 20 year down the line? I don't know. Now we have to add one more blockchain, which is Cardano, because they started the native token creation with their latest release. But so far, Ethereum has been the most popular one. And most of the applications are being built on top of Ethereum. So on the DeFi, and again, if you have any questions, please put it in the chat. Or if I'm going too fast, do let me know. Is it too fast? Should I slow down and maybe give more examples, or are you able to catch up and understand? Again, my intent is to make sure that you are able to understand what this DeFi is and should not be, a mystery black box. But if it is going too fast, do let me know. This is a lot to take in. Yeah, so I'm not going to cover everything today. Only today I'm just going to talk about the beginner one. And then leave it over there. Do a little more study. See what you want to tackle in this DeFi before you go over there. Yeah, I'll paste the link to the white paper. So if you're interested in this space, let's start from a beginner one. And today I'm only going to talk about beginner. So let's look at beginner. So in beginner, like I talked about stable coins, right? If you have been buying and selling some of the digital assets, you probably may have interacted with some of these stable coins. The reason is, say, some of the coins were not available on Coinbase. Some of the assets were not available on Coinbase. Example, Cardano blockchains, the native coin, which is called ADA. It was not available on Coinbase until last week. So if I were to invest in ADA, I have to go to some other exchange. That exchange does not accept wire transfer from my bank or ACH transfer from my bank. But they do accept and allow me to buy ADA for using USDC as a stable coin. So what I did, and this is what I actually did, is I go to my Coinbase, move money from my bank account onto the Coinbase, and I buy a stable coin over there, USDC. That's a Coinbase stable coin. Now, I could have bought ADA on the other exchange using Bitcoin, but then I end up into the same problem that I would end up if I buy Tesla using Bitcoin. I may have a seller remorse later on. So I don't want to do that. So what I do is I go to Coinbase, one USDC, I have to spend $1 to get one USDC. Either it is today, it is tomorrow, day after tomorrow, a month later. It maintains its value at $1. So I go to Coinbase, buy $500 worth of USDC. Go to my other account and then transfer these to my other address, which I hold in the other exchange. The transfer gets completed in 5 minutes, 10 minutes, depending on, I think Coinbase is actually a little more strict. They wait for a lot of confirmations. So it takes around 10 minutes. 10 minutes later, I see that my USDC balance on my other exchange has now increased by 500. Now, if I want to buy ADA today, I'll buy it. Want to buy 10 days later, I'll buy it because USDC value is not going to change. So that is like acting really as a currency. Then I go ahead and say, I want to buy ADA, I want to pay through USDC. I finish this transaction. So USDC serve that purpose of facilitating transactions for buying or selling. Now there are multiple stable coins. USDT is a Tether, is created by a company called Tether. And there have been some news around it. I'm not going to get into those. There are different types of stable coins that are created depending on what type of company it is. And I'm not going to get into details of those. But this is again a part of decentralized finance. If I were to interact, I need a stable coin. So there are USDT, USDC, DAI, BUSD, multiple type of stable coins. Second is digital decentralized exchanges. If you're a beginner, want to dip your feet, maybe other thing you can do is to go to these Uniswap, Aave. These are decentralized exchanges in which you can go and maybe lend, or not even lend. It's like on an exchange, you can become a liquidity provider. You can lock in your digital asset. Going back to the example of Apple, you have Apple shares. I want Apple shares. You sell it to the exchange, or but we don't interact with each other. We have to pay money to market makers. Even though you can say, oh, I trade for free, but Robinhood has told us that nothing is for free. Market makers will get their money either from a front pocket, which you know of, or from a back pocket, which we don't figure out, which most of the Robinhood users figured out later on, that they've been taking money from their back pocket. But there's a purpose that those market makers serve, which is to provide liquidity in that exchange. Say you have million shares of a company. In centralized finance, you can't do anything with those. You can't become a market maker just by providing liquidity. Now, if you have that similar concept on a, say you own a million coins of some asset, million units of some digital asset that other people want to trade in, you can stake those, you can lock those on this decentralized exchange. And you become a liquidity provider. So if I want to buy those, I will go to these exchanges, let's say Uniswap. And I say I want to buy this. And there is enough liquidity. So then I'll be okay with it, not too much of a big ask spread. Exchange will get some revenue. That's how the exchange will make some fee. But more important, you as a liquidity provider will get a share of that revenue pool. So if you have some digital assets lying around, and again, do your own study in terms of which exchanges you want to deal with, but you could become a liquidity provider. You could become a market maker. So on the digital exchanges, we are seeing the interest in terms of how much of the trading volume is happening and the revenue is happening. In 2020, Uniswap actually overtook Coinbase in the daily volume. Just a lot of people were started trading on this decentralized exchange. Say for Coinbase, if I were to open an account and start trading it, I have to do KYC. I don't have some of those documents. Okay, I'll go on to Uniswap. Third thing for a beginner, as a beginner, is lending. Okay, I don't want to make we looked at how to make use of your current digital assets to become a liquidity provider in a decentralized exchange. Other thing you can become is you can lend it to someone. Now these are Aave, Compound, etc. are some of the platforms in which, again, you can lock in or you can stake your Ethereum, Bitcoin, whatever, and you can lend it to someone. And then you can earn interest on that. Otherwise, those assets are doing nothing in my portfolio. I mean, except the capital appreciation. They're not earning anything. In this case, these are the lending platform wherein I can go and lock my asset into Aave so that it is available for someone else who wants to borrow this. It's available for them. Now we have an infrastructure wherein there are futures available for Bitcoins and Ethereums. So someone trying to short it, will need to borrow it from someone else, they can come to Aave and borrow it from Aave. I'm trying to give you a simplistic example of where that use case might exist, but someone would borrow it. Or NFTs. Now, this NFT would have been in intermediate level a few months ago, but today everyone knows about NFT. They don't know about, let's say, stable coin, but NFT is now become a commonplace. We talked, I'm not going to talk about NFTs again. We did a whole deep dive into NFT a few weeks ago, but finally, Jack Dorsey sold his first tweet for 2.9 million. Beeple's 5,000 first days, 69 million. This cat, JPG, 600K, 6 million. These, and there are many more which have already come in. So if you want to dip your feet into DeFi and want to trade on some digital assets, if you are a asset creator, you can go to Rarible or OpenSea. I think nowadays I'm seeing another one which is vCent, which is where I think Jack Dorsey sold on that platform. So you can go ahead and create your digital art and sell it through those platforms. Or if you have some money lying around, if someone had $69 million to buy the rights to this photo, which, I have a JPEG of it already on my desktop. So that's another one. And not surprisingly, because when I first talked about whole this DeFi in September, October, that time I had mentioned that NFTs could be a kind of a gateway drug for common persons to dip their feet in decentralized finance. Now, this is difficult to explain. Trading tokens becoming liquidity providers, how automated market making works. When not to this crowd, we've been talking about these things for a few months. If I were to explain it to my dad, it's difficult. But this one is little easy, and that's why we are seeing explosive growth and interest in NFTs, because people understand the concept of owning a piece of art, music. So it is easy to relate it to a similar concept in a different context. In this case, the context is decentralized finance rather than being centralized. So these are the few avenues for a beginner ones. And as we advance, we can get into asset management and risk management and derivatives and dealing with yield farming and flash loans and whatnot. That's for later discussion. Today, I just want to give you a little insight into a lot of stuff happening on the DeFi side. If you have started dipping your feet into crypto economy by buying coins, this may be the next step. Again, you should see how comfortable you feel with this. So that ends up today's discussion on DeFi. Let me address some of the questions.